welcome back to the channel. Today we're diving into a powerful instrument that you can use to immediately improve your trading strategy, and I'm talking about the Fibonacci tool. If you want to be able to pinpoint exact key levels on the chart, then this is the right video for you. So let's break it down in just 5 minutes. The Fibonacci tool comes from the Fibonacci sequence. This is a sequence of numbers where each number is the sum of the two before it. In trading, we look at important Fibonacci retracement levels, and these levels can help you find possible turning points in the market. By marking these levels on your chart, you will know where the price may pull back to before it continues its move. So that means that's where you can look for your entries. Now let's talk about the Fibonacci levels that you need to focus on. 38.2% and 61.8% retracement levels. And these two levels are crucial for your trading entries. So let's start off with the 38.2% level. When the price retraces to this level after a move, it often signals a potential entry point. That's where you can look for confirmation through candlestick patterns or indicators to validate your entry. And this is an example of the 61.8% level. This is often considered the golden ratio. A retracement to this level is frequently seen as a strong reversal point. Again, confirmation is key here. So look for other indicators to support your trading decision. By identifying these levels, you can place trades with a higher probability of success. Now, combining the Fibonacci tool with other indicators or other confirmations in your trading will definitely give you the best results. It will also give you a more advanced view of the market, and it will improve your trading decisions. So for example, with the Fibonacci tool, you can use the 50-period exponential moving average. So we're looking at an uptrend, we see price pushing up, then it gives us a retracement to the 61.8 golden ratio retracement level, and then at the same time we're touching the 50 EMA as well. So that's another confirmation that you can use in your trading. Or if we're looking at multi-time frame analysis, then we can work with multiple time frames. So let's say we drop down to a lower period and we can start looking for trading opportunities here or additional confirmations. In this case, we can look at this demand zone, right? So if we drag this out to the right, we can see that price has actually tested the demand zone as well, and it's also given us a reaction at the 61.8% level. This is how you should combine the Fibonacci trading tool with other confirmations in order to improve your trading strategy. Let's check out this bearish market scenario right here. So we've got a downside move, okay, then we've got the pullback and a continuation of this downside move. So I'm just going to place this Fibonacci up here on the previous swing high and swing low, and as you can see, price has clearly reacted off of that 61.8 retracement level, and right after it touched it, as you can see, we had a massive drop to the downside. So we're now looking for a continuation of this bearish move, and I'm going to place the new Fibonacci right here from swing high to swing low, and we've got the 38.2 retracement level. So what I'm going to do now is I'm going to place my sell order right here, and this time we're going to be combining the Fibonacci with a support and resistance areas. So right here we've got a previous support, which after price broke below it, we're now expecting to act as resistance. So my entry is going to be on the 38.2, but my stop loss is going to be, let me just zoom in a little bit so you can see that even better. My stop loss is going to be above this resistance zone. And I've also got some wicks right here, so I'm just going to place my stop loss right there. And take profit will be at the most recent low. So this is how the setup looks. And as you can see, the price then touched that 38.2 level. It reacted off of that resistance zone as well, and right after this we've got a drop to the downside. So this is 1 to 2.3 risk to reward ratio, a quick and easy trade using the Fibonacci tool. To wrap this video up, the Fibonacci tool is a very valuable instrument in your trading toolkit. When you combine the 38.2 and the 61.8 retracement levels with other confirmations, just like we saw in this video, you can definitely build a very decent trading strategy. If you want to check out my full Fibonacci trading course, make sure to go over to our website, trendlineforex.com, or just check the links in the description below this video. I'll see you next time.